I have listed out various decisions with help of my junior, Mr. Akshay Pawar. After I list out, I realized that the list is too long. But after going through the decisions, I found that certain decisions are more for information and certain decisions we shall discuss it at length. So let's start with our task. The first decision, which is a recent decision of Supreme Court in the case of CIT versus Wipro Limited. Basically, here the point before the Supreme Court was in regards to a challenge of a decision of a Karnataka High Court, wherein the original claim in regards to carry forward of losses, which the SSE had not claimed in his original return filed under Section 139(1), but he had claimed it by way of a revised return filed under 139(5). The reason being that in the original return, when the SSE had filed, the assessment year involved was 1-2, and when the original return was filed by the SSE for the relevant year under Section 131, under Section 139(1, the SSE had claimed exemption under Section 10B while filing his original return. Later on certain reasons, the SSE took back its claim under 10B and he filed a revised return under Section 139(5), whereby he claimed the carry forward of loss under Section 72. The assessing officer originally disallowed this particular claim. However, when the matter reached before the tribunal and the High Court, this claim was allowed by both the authorities before the ITAT as well as by the Honorable High Court. One of the reasons why the assessing officer had disallowed, saying that the SSE, one of the requirement while claiming the exemption under Section 10B is that the SSE needs to file a declaration before the authorities, which he had not filed within the time allowed under Section 139(1). And subsequently, only after the due date had expired under 139(1, subsequently the SSE thought of going back on his claim of 10B, and he filed a revised return under 139(5). When the matter reached before the Honorable Supreme Court, the department basically argued that while filing his original return, the SSE had not claimed the losses and therefore he cannot be allowed to claim it by way of a revised return. The department also argued that the requirement of filing a declaration, which is a requirement under Section 10B subsection 8, which the SSE had not fulfilled, is a mandatory requirement and it is not a directory requirement. The SSE had contended that even if this particular declaration is filed during the course of the assessment or subsequently by way of while filing the revised return, this declaration is filed, it is due compliance of the requirement of Section 10B, and therefore there is no violation as far as the 10B 8 subsection 8 is concerned. These were the arguments of the SSE. As far as the department is concerned, department raised various contention and saying that if we allow in this particular manner, whereby the SSE can go back to its original claim, which he had made it under 139(1, by filing a revised return under 139(5. The department also contended by reading the provisions that the 139(5 is for in the case where there is an omission in the original return, there 139(5 can be filed. The department relied on Section 80 also, which basically says that when you are filing, when there is a loss return, you have to file the loss return within the due date as specified under Section 139(1), and the necessary return is required to be filed in time, whereby your claim under Section 72 for carry forward of losses will be considered and will be allowed. So these were the basic arguments of the department. The Honorable Supreme Court reversed the decision of the Karnataka High Court, and it held that revised return under Section 139(5) can only be filed to correct a omission or a wrong in the statement in the original return of income filed under 139(1). But a revised return of income under section 139(5) cannot be filed to withdraw the claim for deduction under 80(8) and subsequently claim the of carry forward of loss and set off of any loss. So further, the court also observed that filing a revised return under section 139(5) of the Income Tax Act and taking a contrary stand of claiming the exemption which was specifically not claimed earlier while filing the original return of income is not permissible. The court also dealt with the requirement of 10(b)(8), whereby it observed that where the SSC filed its original return under section 139(1), where it observed that even the submission of the SSC that it was not necessary. Even the submission that it was not necessary to exercise the option under section 10(b) subsection 8 of the Act. Even without filing of income, the SSC could have submitted the declaration in writing to the assessing officer during the course of the assessment. In the course of the assessment before the assessing officer, and therefore the argument of the SSC. One second there. So the argument of the SSC was also this argument of the SSC was also rejected. Even the submission made behalf of the SSC that filing of the declaration subsequently, maybe during the course of assessment proceeding, would have no difference. Also, has the court has that this argument also has no substance. The court further observed that the requirement of filing a declaration under section 10 can be said to be coterminous with filing of the return under section 139(1), as it has a check and it has been put in place by virtue of section 10(b)(5) to verify the correctness of the claim of deduction at the time of filing of the return. Let me also point out to you, if one goes through this decision, it will be seen that while making the submissions, the SSC had relied on various other decisions in context to depreciation claim and in context to other provision of 80 HHC and 80 HHB, wherein the requirement of filing certain reports even made during the course of the assessment. The courts have held that even if it is filed in the course of the assessment, these are directory provisions and the claim should be allowed and it should be considered. However, the Honorable Supreme Court, after considering all these requirements, took a stand that no, this requirement is mandatory and the SSC should have filed all these declarations while filing its return and while filing its original return under section 139(1). Also, the court observed that if an SSC claims an exemption under the Act by virtue of section 10(b), then the correctness of the claim has already been verified under section 10(b) subsection 5, and therefore the claim is withdrawn post the filing of the return. The accountant's report under section 10(b)(5) would become falsified and would not stand to be nullified. So these are certain observations. The court has also referred to section 80 of the Income Tax Act, and the courts have made an observation that where the SSC filed its original return under section 139(1) and not under section 139(3), the revised return filed by the SSC under section 139(5) after the due date under 139(1) can only substitute its original return under 139(1) and cannot transform it into a return under section 139(3). So basically, section 139(3) talks about where an SSC wants to claim a loss return, he has to file the return in the prescribed form within the due date provided under section 139(1). So in order to avail the benefit of carry forward of and set off of any loss in accordance with section 80 of the Act, the claim should have been made in the original return filed under section 139(1). And therefore, the original the order of the Honorable High Court was reversed in this case. So One thing from this judgment one can pick up, that though this judgment is in context to a claim which was made under section 10b, and it was in context to later on it was revised to claim the carry forward of loss, whatever the reasons would have prevailed over the SSC to withdraw its claim and thereafter to claim carry forward of loss. But this decision may have a lot of impact, because many a times we see that by way of filing of the return, by way of filing a revised return, the SSC tries to make a new claim altogether and substitutes its original return to a great extent. Many times this is done due to ignorance, or maybe it is done that the original return was filed in a hurried manner or certain details were not available. And at times there is a change in the position or understanding of that particular facts or law. This particular act is done. But this particular judgment will come in the way, because the observation in this judgment is that basic observation that which says that the revised return can neither substitute the original return nor convert the original return into a belated return, will have lot of effect. Also the observation of the court in this is regarding that the requirement of this exemption provision 10b8, which is that the declaration is required to file. So there are different other provision where some similar sort of declaration or reports is required to be filed, which is mentioned, and the section is basically silent as to whether it is directory or it is mandatory. At times the provisions also do not lay down any time limit, or they say it should be filed along with the return of income. And as I see, many times take a chance that yes, if it is not done during the while filing of the return, it may be done at a subsequent stage. So these things will have a great impact. This decision will have a great impact as far as these types of cases are concerned. So one has to now plan, or one, if filing a revised return, has to think and go through that whether there is an omission or wrong in the original return, whereby I have to file my return, revise my original return. So for the benefit of everyone, let's have a look at section 139.5, 8, 139.5, which talks about the revised return. So many times I have said people very casually file revised return, making claims or withdrawing claims, making new claims. So this decision will have a great impact as far as those types of cases are concerned. So if you will read section 139 subsection 5, it says that if any person having furnished a return under section 1 or subsection 4 discovers any omission or any wrong statement. So the word is very clear: if there is an omission or any wrong statement therein, he may furnish a revised return at any time before 3 months prior to the end of the relevant assessment or before completion of the assessment, whichever is earlier. So one has to now read that whenever you are filing a revised return, you have filed your original return and now you have to file a revised return, and you discover any omission or any wrong statement. So this has to be a requirement to be met. Though earlier this was not taken so seriously and people used to make claims or withdraw claim, but now keeping in view the observation of the Supreme Court in facts of each case, depending upon, here it was a case where a 10B deduction was claimed and a carry forward loss was there, and therefore this matter had traveled here and this issue has come. But there are many other different facets of this decision which may have application in other situations also. So one needs to be careful now when he's filing a revised return, and should take into consideration this particular decision of the Supreme Court. Being a decision of Supreme Court, one has to keep in mind this, because assuming at a later point of time some further clarification or dilution of this decision would be made, it will take its own time. We should remember, I remember at this stage the decision of both India, though it was in a totally in a different context, where a claim made by filing a letter before the assessing officer, the Honorable Supreme Court, though the judgment was too short and not dealt with various aspects, has said that you cannot make a claim by way of a letter, you should file a revised return for making such a claim. And though thereafter subsequently that decision was explained, and it came out through various other high court decisions, that the power of the appellate authority to to entertain a new claim is not restricted, and they can entertain. So keeping all these factors in mind, I think so one needs to be careful and read this decision in this context of filing a revised return. We will move to I will also like to read section 80, section which is normally avoided or is missed out many a times. So one needs to read this section and keep in mind section 80 also. One second. So section 80, which is that submission of return of losses. Notwithstanding anything contained in this chapter, no loss which has not been determined in pursuance to a return filed in accordance with the provision of so and so shall be carried forward and set off under subsection 1, 72 or subsection 2 of 73, etc. of section so and so. So this section also you need to keep in mind. Simultaneously, an additional section is also there which you should keep in a section 80 AC. Deductions not to be allowed unless a return is furnished. This is just an offshoot of this judgment and of discussion which I am just pointing out, that you need to keep this provisions 80 and 80 AC. Many times these sections are ignored. This has to be kept in mind when you are making a claim, and there are various deductions or exemptions are part of your return of income. So this has to be, yes sir, now you were saying something.
They can say substitute your notice.
That is a
That is 142, article 142 there.
That is the,
that's
What do you mean by omission and mistake? Making a wrong claim is certainly a mistake.
yes.
So correct statement.
So making a wrong claim in the facts which was there before the Supreme Court, the SSC has withdrawn its claim and it wanted to substitute.
Falsifying the CS certificate. The CS certificate may be correct, but I don't want to have that claim because of some other reason.
So that
And is it wrong? Then that means you are thinking now something else. Maybe going forward, you thought that let me start my first year from the initial year should be a different year. So you want to withdraw that claim.
So see, this is a case of Wipro, and there would have been many other as said that there might be various consideration and reasons why they wanted to go back. And so there would have been different. What the court said, that whether it was a wrong or there was some omission, one has to understand. Just because I make a claim and now I say no, I want to go back. For example, let's take a case that you compute a capital gain, and later on you say no, it is not a capital. I should have done it under the business head. That it would have been more beneficial for certain reason or the other. So can it said to be a wrong claim or a omission? So the point is that now this is a Supreme Court decision, and it will have a binding effect, as I said, till subsequent or in some different situation or different facts. It has been clarified, or it will be clarified that and you have to keep in mind here it was a claim of 10B deduction. As I said, that there will be a different facet of this effect of this in different sort of cases. So I think so one should keep in mind, because I have seen very casually revised returns are filed. It is very casually revised returns are filed, and the considerations for filing revised returns are totally different and not what I read. Therefore I tried to read the section and I pointed out. So something is there. We cannot discuss all the facets right now, but one has to keep in mind this particular decision. Coming to the next decision, Gyan Castings Private Limited. So basically, here was a case where the SSC had come up before the Supreme Court against the order of the High Court, where the High Court has refused to entertain a writ petition challenging the 148A proceedings, reassessment proceedings by the Punjab and Haryana High Court. Have refused to entertain the petition, saying that you have come at a stage where the whole proceedings are still pending, and you have come at a very early stage, and there is no question where the jurisdictional issue is involved, or there is some fundamental right of the SSC has been violated. It is not a case where you are saying that yes, the assessing officer has acted without jurisdiction while issuing the notice. That sort of issues are not raised, and therefore at this stage the court will not entertain or interfere with the proceedings under 148, and thereby the Honorable High Court had refused to entertain the writ petition of the SSE. And what comes out from the High Court order of Punjab and Haryana, that the SSE had not raised any such ground where the jurisdictional issue was challenged before the court. And therefore, they said that the authority has exercised its jurisdiction, which is vested in them, on merits. Whether the factually there is some error or there is some problem, the SSE, from the reading of this judgment, it seems that the SSE tried to raise some issue about the facts involved are wrong or something like. The court said that the error which is would have been there, which will be looked into in the course of the assessment and not at this particular stage. And for rectification of error, statutory remedies are provided under the Act. And therefore, considering all these facts, the court refused to entertain the petition. Complete facts, obviously, of this case is not coming out in the High Court order also. And the SSE had, after that, challenged before the Supreme Court by filing a SLP, and the court, with a small order, just refused to entertain the SLP and said that after reading and going through the material, we do not find any reason to interfere. So one thing which comes here, that earlier also in the pre-amended position amended position of reassessment 148, also there were decision to this effect where the courts, where the SSE has come up before the court without challenging the jurisdictional issue or without challenging the very substance of reopening. In such type of cases, court have refused to entertain the petition. So this is once again a reconfirmation in context to 148, which one has to keep in mind while he is filing or approaching the Honorable High Court by way of a writ petition. Unless the jurisdictional issue or some fundamental issues have been raised, just merely because some SSE has two views or a different view has to be taken based on the facts which has come out from the information or the material. One cannot just reach to the High Court saying that factually there are errors or factually the case is required to be seen in a different context. So courts have refused to entertain in this case. So one needs to keep this decision in mind when they are planning to file a petition before the High Court. So again, this decision also has to be read that this was in facts of its own case. It is not something in general that in all the cases a writ petition will not be entertained. It was the facts of this case where the courts have decided. The next decision, which is of super relicare laboratories, this is just for information, though the issue regarding deduction of tax in regards to the commission and brokerage in regards to the collection center, normally the laboratories and the testing services which are provided to customers at the various hospitals, whether 194H deduction of tax source is required or not. This decision being was decided by the Bombay High Court. However, the decision was challenged by the department before the Supreme Court, and Supreme Court has issued a notice in the SLP. That is, the SLP has been admitted by issuing of notice, and there are certain other matters where it has been tagged. So one has to keep this mind. Mostly people had thought that after this decision of Bombay High Court, this issue would have been settled. However, being this SLP, and the notice has been issued in the SLP, and therefore one has to keep in mind that yes, someday this matter will be decided by the Supreme Court. So again, this is just for information. The High Court there was a case where the High Court engaged in providing the laboratory and testing services to its customers through third-party collection center, had allowed certain discounts to such collection center. Since SSE did not perform any act of paying but was only receiving payment from these collection centers, there are no obligation on SSC to deduct tax at source under section 194H on discounts so allowed. So I have come across a similar sort of arrangements being made by hospitals also, or with these laboratories, and there are certain discounts or etc. which is giving, and there are cases that we are just a person who is, they are available at their hospital where they provide these services. Actually, we have not engaged, or we have no other arrangement with the laboratory services, but we are collecting. So in that context also, one can see how this decision will have an effect. Being a notice has been issued, so one needs to keep in mind this issue is still alive before the Supreme Court. Coming to the next decision, Basant Lal versus Union of India. Just a second, I'm just trying to open the decision which is there in my file. So this was a decision in context to, one second, yes, this decision was again in context to faceless assessment, where a reassessment proceedings was going on. I felt the importance of this decision because in the very peculiar facts where the SSC had made a request for personal hearing, though the date of the notice had already expired, and thereafter the request was made by the SSC, and the assessing officer, without dealing with the request of the SSC, proceeded ahead with passing of the order without giving the personal hearing to the SSC. The SSC had challenged this before the Honorable Andhra Pradesh High Court, and the courts said, after looking into the provision, and said that even if it is after the due date or the notice date which is provided, if such a request is made, the assessing officer is duty bound to provide an SSC if the orders are not passed, and he simply cannot reject that and move ahead with passing of the order. So now this personal hearing, there are various judgments which are there of our own courts and other high courts also, but now it is made very clear through all these decisions, if somebody synchronizes and reads this, that even if this request is made, maybe at the time of hearing, or maybe in certain case at a belated stage, when this request is made, the assessing officer is duty bound to provide me an opportunity of hearing without any ifs and buts. You will also find that in this context, there are also decisions where the video conferencing was provided. However, while on the date on the video conferencing, due to some technical problems, the video conferencing could not be completed, or it was not able to, the SSC was not able to log in, and etc. This type of issue is there. In such type context also, the courts have said that once the request is made, it should be seen that the hearing should be actually provided, and it cannot be skipped by saying that yes, I had provided, etc. and other reason. So all these factors, if all these decisions, if we read together, so now it has become very crystal clear that in all such cases, wherever the request once made, the assessing officer is duty bound to provide you. So it is an advisable that at a later date, or trying to raise this particular issue of personal hearing at the belated stage, it is always better that at the initial stage itself, you make it very clear to the assessing officer that I am complying with these notices I am providing, but please provide me a hearing. Maybe you have a repeated request made in all your correspondence whenever you are having, so that you ultimately get this particular opportunity of hearing before the assessing officer, and not to take a chance that yes, I will raise this at the final show cause notice when it is received. So basically a good decision. After reading the whole provision, they have, even here it is a case that request was made after the time limit which was provided in the notice. The courts have gone ahead and said that yes, it is wrong. They have paused and resend the matter back to the assessing officer to redecide this matter.
Practically what happens is uh, the tab is closed, either you have made a submission of that date. And thereafter, again, if I have to make a request, there will not be a tab available to make a request again. You have done it. Unless you are saying that this is my part submission, part submission.
Okay.
So I don't know how this was done.
Here it is mentioned it was request were keeping the status as open.
Okay. So it was, you must have.
So even after crossing that date, the order was not passed and it was still kept open, and therefore the SSC could have the assessing officer could have provided an opportunity to the SSC. So that was.
Then they are keeping it.
No, but then are you able to, even if it is open, there should be a tab where you can make a submission. Only in that submission you will be able to.
Even after doing a full submission, you can again make a new submission against the same.
That is also possible.
So I think so. These are all
New recently, right?
No, not.
So that it is.
So in various situations there are different things. So it is basically either somebody is manually allowing it, or it is not automatically, which is done that once the date is crossed, it is closed or something like that.
If it is closed and pass the final order, it is still open.
It is still open. So if your request, even if it is made at that stage, basically the quota is even if it is made at that belated state, you should be.
Unless you are in the last 6 days. So after 24th of March.
Yeah.
There they are not allowed. There you are getting that.
It becomes difficult.
But considering the position what the courts have taken, the better way of looking is that you make a request in advance, and once you do that, the assessing officer's duty bound to provide you an opportunity of hearing. So why to miss this opportunity and why to wait for the last few days? You do it beforehand. So that is what my advice will be. Going further, the fifth decision is of Kerala High Court. So basically, this decision is in context to Section 263 and levy of penalty under Section 271(1)(c). So here was a case where the commissioner, while exercising its power under Section 263, had set aside or remanded the matter back to the assessing officer, saying that you re-decide the matter and relook the matter. And the assessing officer, while issuing an order of assessment, is already vested with the power. Once he completes the assessment, he will decide the matter of levy of penalty. But here, while issuing this order under Section 263, the commissioner directed the assessing officer to impose penalty also in this particular case, which the SSC had challenged by a way of a writ petition before the High Court of Kerala High Court. And the court, after going through this, the court observed that once the matter is remanded to the assessing officer, the assessing officer will do a fresh assessment. He is going to do a fresh assessment. Once he is going to do a fresh assessment, the assessing officer, so I will just read the one sentence of this order. The assessing officer, by issuing an order of assessment, is vested with all powers, including the jurisdiction to express his satisfaction for initiating penalty proceeding. So once the power is vested with the assessing officer, what was the need of the commissioner to direct the officer that you impose penalty in this particular manner? And therefore, the court said that while issuing the order under Section 260, the principal commissioner cannot direct penalty to be imposed. This power has to be exercised, and it's already vested in the assessing officer, and he is going to decide after the assessment order is passed whether it is a fit case or the satisfaction recording that yes, whether it's a case of requirement of imposition of penalty or not. So this is a decision, something rarely we see, but therefore I thought that it should be brought to the notice, something where the power is vested with the assessing officer, though there are earlier decisions that if a power is vested within a particular authority, that authority should only decide that and exercise that power somebody else should not interfere or direct him that you should do this particular act in this. And what I recollect is a decision of Supreme Court in the case of Green Worlds, which is in context of 148 and 263, and it was a very different matter, where all these powers and all this exercise of power by various authorities was looked into by the court, and the court had said that the manner in which an assessment has to be done, the higher authorities cannot direct the assessing officer to do a particular thing in a particular manner. Once the power is vested with the particular authority, he should exercise the power in the manner provided under the law. And once the original assessment, the court said that once the original assessment is completed, the power to express the satisfaction for initiating the penalty proceeding is upon the assessing officer, which he will exercise that particular power. So considering that this decision, that how a commissioner had exercised this power, to that extent this decision, it will be helpful. The next decision is of Bombay High Court.
So what was the question of law in this RAM meters? Yes.
Sorry?
No, we are in fifth only.
I am on the sixth.
Yeah,
Great
now-
Ship India Limited versus ACIT, Bombay High Court. So basically, it is a reconfirmation of the earlier position of law, but we have seen of late that in this new regime of faceless, where the communication between the SSC and the assessing officer or their representative is of late not available or not easily, the refunds which are issued, again without intimation under section 245, though the provision is so crystal clear and it requires no other interpretation, the officers, without giving any intimation, make the adjustment of the refunds and set off with the earlier payable tax payable without even intimating prior intimation to the assessing officer. In this context, again, this was a case where the matter had reached the Bombay High Court by way of a writ petition, and the Honorable Court, relying on a very old decision in the case of A.N. Sheikh versus Suresh B. Jain, where this particular 245 provision in during that time also was looked into and interpreted, and said that the assessing officer is required to give a prior intimation, and prior intimation means a intimation as required under section 245. By issuance of 143(1) is not a sufficient compliance of requirement of under section 245, and said that a prior intimation is required to be given. So the same position of law has been once again confirmed by the Honorable High Court, and on the facts of the case, the court held that the action of the assessing officer in making the adjustment without prior intimation is bad in law and illegal, and has hence cost. Thus, it comes to my mind that now it is a high time where the assessing officers are not acting in accordance with, means on the face of it, the provision is so clear. There are judgments which have already been interpreted. There are no contrary decision. Still, the assessing officer are not acting in such a manner. Though we have found various decisions are there where courts at times take some action or impose cost or reprimand. But there has to be something inbuilt also. There has to be a time where accountability needs to be put in on the department, that if there is a default by the SSC, the SSC is levied with penalty, interest burden, and nowadays you have also seen prosecution have been launched on the SSC. What is the, because wherever there is a right and there is a corresponding duty, and opposite also is true. When there is a duty, there is a corresponding right. So in such a case, why not there has to be some responsibility, some accountability which should be imposed on the assessing officer. Certainly, the amount which will be involved in this matter was in crores, and so around 2 crores 22 lakhs. The SSC was well enough to go to the court, but there are not that each and every cases the SSC will afford to reach the court challenging these types of adjustment. So just a thought where the court should, why not, there has to be an inbuilt mechanism whereby these officers should be put on check or balances and be responsible while doing such an act. Yes. The next decision is in the case of Ram Builders. So Ram Builders, again, it's a decision of Bombay High Court, a very recent decision, which was passed in July, and it has been passed by the present bench of the Bombay High Court. It was in context of bogus purchase, and the court has once again gone in detail on the facts of this case, and after relying on various decision and prior decisions of the Bombay High Court as well as the Gujarat High Court, had observed that where all these particular SSC has given all the details in regards to consumption of its material. This was a case of a civil work undertaken for road construction by a civil contractor and work which was mostly done for the government, and therefore based on information of sales tax, the case was selected, and on that basis, once the SSC was had given all the details, explained the explained how the work is done, the nature of work which is involved. And after doing all this thing, the court finally came to the conclusion that whatever the CIT appeals as well as the ITAT has confirmed, in such cases, the total addition cannot be made, and whatever has been given, the relief given by the tribunal, they do not feel that it is required any interference. So the argument of the department that the entire amount ought to be have added in this particular case, they said that it cannot be accepted, more so where the purchases per se were not in dispute. The parties from whom the purchases have been made, the SSC was able to provide certain details, though the department had said that they are bogus because of the sales tax investigation. But once the consumption details, there were certain certificates of the work which was completed was also given, which is find a reference in the order that completion certificate in regards to the contract was submitted by the SSC. In such type of cases, the court came to a conclusion that whatever has been estimated at 12.5% is proper and it doesn't require any interference. So, sir, you were asking that what is the question of law? Yeah. So the question of law which was framed in this case was whether in facts of circumstances of the case, the tribunal is justified in upholding the order of CIT appeals in deleting the addition to the tune of 4 crores, so and so added by the assessing officer on account of non-genuine purchases by sustaining addition only of 59 lakhs by adopting estimated rate of 12.5% on the unexplained and non-genuine purchases. So this was a case. Though I have also in my chart on the extreme right, I have listed out the other decision of Bombay High Court. I have just listed out the Bombay High Court, though there are decisions of other high courts also. But I have just listed out the decision of Bombay High Court. These decisions, one has to just not blindly apply to each and every case, because I have heard people are arguing or that if in Muhammad Haji this is done, why not it should be applied? I do not agree with these types of provision. If you will read this particular decision of Ram Builders, you will say that in spite having so many decisions, the court has gone through all the facts, listed out all the facts, and thereafter they have decided this particular case. So it is not something that, yes, in that case it has been done, so in all the other cases it will have to be done. Yes, one thing what you can borrow from this decision, that in a case where you have provided the complete details and you have given all these details before the lower authorities, and thereafter the lower authorities has estimated your disallowance or some percentage, or whether it's 12.5 or some other GP addition. In such cases, the courts are taking a consistent view that we will not interfere in such type of matter. But that are the facts which is there. I have come across cases where just bogus purchases cases are there at the lower authority. They blindly just go and they accept 12.5. They give some judgments without even looking at what is the context that judgment is. That this was a case of a civil contract. So there is a difference between trading, a trader, a manufacturer who is able to give the consumption. Then there are also decisions in the context of stock register maintained. There are decisions in the context of where the stock register are subject to scrutiny by other authorities also. So all these factors also have an influence. It is not that just it is a.
There was a trend in tribunal. Now the members.
No,
They don't open also.
But you have to understand that in all the cases of bogus purchase, whatever the quantum involved is there, the department has filed an appeal to the High Court.
Even for 20,000 they have filed.
They have filed. So
Because that it comes in the exception. If you have received from state.
The department has accepted in many cases department counsel. Yes, this is already covered. So here also, I think there is no question of further relief because it is not SSC's appeal. It's Ram Builders. So 12.5% is as Mohammed Haji Adam, I think, should still. Yeah, because this is a department's appeal.
Different.
But this is a department's appeal, so there is no question of further relief.
So this is something which one can refer and rely, but as I said that you can always refer to the context in which the judgments have been there, and you can gather these facts which will help you in putting the case in a better way before the lower authorities.
Sir, one conceptual question. So
Yes.
many cases, what has happened is that department, after CIT appeal giving some relief, department does not go to High Court. ITAT. But after ITAT, they go to the High Court saying that the assessing officers or the order should be, similar to that of what assessing officer did the addition.
See,
sorry,
sorry.
CIT appeal gave a partial relief, right? Assessee went to tribunal. Department against the partial relief. Department doesn't go to the ITAT. But after ITAT order, the department goes to High Court saying that the order of the assessing officer should be restored. Is this correct? Can't it be said that they have accepted CIT appeals?
Because there is neither cross objection nor appeal at ITAT level.
No, please come again. What you explained.
There was a 100 rupee addition which was made by the AO. The SSE went to CIT appeal. He reduced it to 25%. SSE went to ITAT
For the reduction.
further relief. ITAT may have kept it at 25 or brought it further down to 12.5. Department has now gone to High Court and said that no, 100% should be there. 100 rupees should be there and not 12.5 or 25 as the case may be. But they have not neither filed an appeal at ITAT level nor a cross objection.
So in such case, what is required is that it has to be pointed out before the court that the department was not in appeal, the SSC was in appeal, so that particular point has been accepted. So in context to VVS, I had come across one, means it was not my case, I had come across in the case of this Vivad Se Vishwas scheme, this similar type something situation had arisen, and the question was what should be the quantum, what is the quantum for which and there the SSC was trying to explain the judges, look, I had gone in appeal before the tribunal, I had gone in appeal before CIT, and thereafter I had gone further reduction. Department has now come in appeal, and I am also in appeal. As far as my is, I want to do Vishwas Se and department, I am withdrawing my appeal. In the context of department's appeal, I want to do Vishwas Se Vivad scheme and thereby pay that differential amount of tax and close the matter. And that was so. There are such type of cases. I agree. But what is required is that somebody has to explain that this is the position, and I think so there should not be any difficulty.
So conceptually they can't go beyond.
Because once you accept the order of the CIT appeals, Thereafter, the subsequent order only deals to the extent or the relief what you, the SSC, had gone before the tribunal. That is the dispute. So if you are claiming 12.5 and 25%, so that is the dispute. So if tribunal has restricted further to 12.5, so really the dispute was 12.5 or 25, and it cannot be 12.5 and 100.
It's 25%.
Yeah.
Huh. So the next decision is of Bombay High Court. It is in context to 80IB 10, where the SSC had claimed this particular deduction, and the deduction was disallowed by the assessing officer on the ground that certain flats which in the project had exceeded the requirement of the prescribed limit of the certain area, and therefore the claim of the SSC under 80IB has to be disallowed. The SSC had further filed the appeal and had explained that in regards to the excess area, wherever those flats are there, in that context only pro rata deduction should be allowed, and to the eligible flats, and to the flats which were exceeding that particular requirement, prescribed limit of 1500 square feet. To that extent, the deduction may not be allowed, which was not accepted by the assessing officer. When the matter reached before the tribunal, the tribunal allowed this. The appeal was allowed by the CIT appeals also, and thereafter the ITAT Pune had decided and allowed the appeal of the SSC, saying that the pro rata deduction in respect to eligible flats which is not exceeding that particular prescribed limit of 1500 square feet area, to that extent it should be allowed. When the matter came up before the Honorable Bombay High Court, the Honorable Bombay High Court looked into this particular deduction and said that considering the nature of this particular deduction, where the language of the statute is so clear that to the extent which the project, the area which is falling within eligible limits, to that extent the SSC should get the deduction. So basically the pro rata claim of the SSC has been accepted by the Bombay High Court. In this context, there were earlier decision of Karnataka as well as Gujarat High Court which were in favor of the SSC, whereby the pro rata deduction was allowed, because subsequently in 80IB there were many other conditions which were laid down, and some of the other condition is violated. It doesn't mean that the whole deduction should go away. Only to the extent where it is not eligible, that should go away, and what is eligible should be allowed to be claimed. So basically the pro rata deduction concept has been accepted by the court. One has to read this decision and can be applied in the context to other cases also where deductions and these are there, and to some extent the pro rata claim can be made by the SSC. So this is once again reconfirming the position by our court of pro rata deduction. We move to the next case. Again, this is a decision of Bombay High Court. It is in the context of 148. So here basically the reopening was challenged before the Honorable Bombay High Court, wherein the SSC had claimed that while filing the original return, it had shown that these expenditure which was there in the context of distribution of free samples and what is now being termed as freebies, which is in view of the explanation to section 37(1), it is not to be allowed. After this particular issue had come up, this particular case of this SSC was reopened, and the case of the department was that this freebies has been provided and it is contrary to the provisions of section 37, and therefore this has to be disallowed. The SSC explained that this fact about this product has been this particular claim has been made is available in the records of the SSC. The return and the financials of the SSC clearly disclose this. The assessment, when it was completed, during at that time also these details were called for, and these details were given to the assessing officer, very clearly making the clear distinction. Some charts on the workings of these freebies which was given was explained, and therefore this is not a case where the details have not been given, and merely because the proviso has come with, and this disallowance is made because there was some circulars thereafter subsequently issued by the medical council saying that this is prohibited as per the medical council rules. So all these were this had come up, and therefore on that basis this reopening is not justified, because this was already there on the record, and the assessing officer was well aware about this advertisement and sales promotion of around 2 crores which was incurred by the SSC. And on perusal of the reasons recorded also, the reliance which was placed by the SSC is in regards to the board circular and the medical council's ethics and etc. regulation, which was also prevalent at that particular point of time. It is not that it came out subsequently. So that was already prevalent at particular time, and therefore this, in that context, just to disallow that particular, relook the facts once again, you cannot reopen the assessment, and therefore the courts have allowed the particular petition of the SSC following the decisions, various decisions in this context. Department had filed from the reply. In this case, they had filed a reply, and the courts also went through the reply, and they found there is nothing new which they have brought in on record, or something new fact which is there which has not been disclosed was brought in, and therefore the court was inclined to allow the petition. This decision, why I feel, is also very important, because in the new regime also, if they merely because based on some information and they want to relook the matter, because again one needs to understand in the new regime of reopening 148A also, it is not that they can reopen or review the decision which has already taken. The power of review is not available with the assessing officer. So in the grab of this new provision of reopening, again, if they are trying to review the decision, you can still rely on these decisions and try to explain that, look, this has already been relooked, and they cannot, just because there is an information, they can reopen the assessment. So in that context, this decision I found it relevant.
ले लीजिए, वो डॉक्ट्रिन खत्म कर ले.
Okay.
So there were two issues I suppose in this. One was whether it was beyond 4 years.
Yes.
So if it was beyond 4 years, then and if a full and complete disclosure made, and that was already there and which has been already examined.
And
that
143.
the reason where we cannot again view.
Yes, truly and fully disclose all material facts.
Yeah, and the assessment was also made under
143.3. Yes.
And second is this information, which was no new information is been brought on record.
So the reasons what they have referred is the medical council rules, etc., which was always prevalent.
Exactly. So
It was always prevalent. It was nothing new which has.
I don't think so. Whether today also in the new regime, whether this will form part of information.
We cannot say the way the information which is flowing and how the computer will look into it, because they are going to form the scheme, and they will, if they will say no, all these type of issues you send it without looking into the details or the facts.
Now these orders have come.
So that will, if there is a difference between the stamp duty and the consideration rate, is reopen. But without looking into what is the context of that document, what is that document. So there was a case which had come at the, just for filing the reply, where actually the case was the whole society at this near JJ flyover, that Bindi Bazaar, that area is there. So they had gone in redevelopment, and this particular person had a one shop where he was doing, because it had gone in redevelopment. He entered into an agreement, and he got a new flat, and for which the agreement was done. Just because he entered in an agreement and the value of that particular was exceeding more than 50 lakhs or so, his case was selected. Thereafter, when it came and I started digging out the facts, and I came that it was a redevelopment. And then I said, you get me the redevelopment, the main redevelopment agreement, and then the other context that your particular agreement which is there. And we submitted all these details to the assessing officer. Thereafter, he accepted that and he dropped the proceedings. So basically, the information, the flow of information will be in a different context also. What is required is the assessing officer's application of mind. So therefore, in the new regime, what submissions you make to explain that why the information is incorrect or why the information is not the information wherein the escapement of income is involved. If you are able to satisfy, I think so you will have a good case as far as the new regime where reopening is concerned.
Will deliver a short presentation on an important doctrine of interpretation of statutes, doctrine of egisdem generis. See, there are many doctrines for the interpretation of the statutes. One of them is doctrine of egisdem generis. First of all, what do you mean by egisdem generis? Egisdem generis is a Latin term, and the meaning of it is of the same kind and nature. What does this doctrine say? This doctrine provides that when a list of specific words are being followed by the general words in a section, subsection, proviso, or a clause of a statute, then the general words are interpreted in a way so as to restrict them to include the items or things which will be of same type as those of the specific words. So the doctrine would apply as a canon for interpretation of statute if following conditions are satisfied cumulatively, which are as follows. Firstly, the provision must consist of specific words and general words, and the specific words should be followed by general words, and specific words should constitute a distinct genus, class, or category. If all these three conditions are fulfilled cumulatively, then the meaning of the general words will be restricted to same class or category of the specific words. Let us understand this doctrine with an example. For instance, a provision of a particular legislation makes a reference to words like car, trucks, tractors, bikes, and other motor powered vehicles. So here, specific words are car, trucks, tractors, and bikes, which are constituting a distinct genus or class of land transport vehicles. And general words are other motor powered vehicles. Therefore, the conditions for applying the doctrine of egisdem generis are fulfilled. So, by applying this doctrine, the meaning of other motor powered vehicles will be restricted to the same class or category of land transport vehicles constituted by the specific words, that is car, trucks, tractors, and bikes. In other words, other motor powered vehicles will not include any airplane or ship because the specific words preceding the aforesaid general words are constituting distinct class of land transport vehicles. Therefore, the doctrine of egisdem generis provides that the meaning of the general words which follow the specific words will be restricted to the same class of the specific words. This is a very important doctrine which is used by the courts for interpreting the statutes according to the intention of the legislation, so as to make the provision of statutes clear and unambiguous, and thus fulfilling the purpose of the legislation. Further, Allahabad High Court has defined this rule in the case of CIT versus Divya Jewellers Private Limited. The High Court envisaged that egisdem generis is the rule of generic words following more specific ones. The rule is that when general words follow specific words of the same nature, the general words must be confined to the things of the same kind as those specified. The specified words must form a distinct genus or category. So this rule reflects an attempt to reconcile incompatibility between specific and general words. In order to invoke the application of this rule, there must exist a distinct genus, class, or category of the specific words. Now, when can we say that specific words are forming a distinct class? If the specific words do not apply to different objects of a widely different character, then we, the interpreters of law, can conclude that the specific words are constituting a distinct class or category. In this regard, I would like to cite the recent judgment of B. Rudragowda versus ACIT, in which Bangalore bench of ITAT held that egisdem generis rule is attracted only when the specific words enumerated constitute a class which is not exhausted and are followed by general words, and when there is no manifestation of intent to give broader meaning to the general words. Another condition to be fulfilled for applying the doctrine of egisdem generis is that there must be an intention of the statute to restrict the meaning of the general words to the genus or class of the specific words it follows. In other words, the legislation should intend to restrict the meaning of the general words so as to include the things of the same class as that of the specific words. Now, the issue under consideration is that how can we identify the intention of the statute to restrict the meaning of the general words to the category of the specific words? This intention can be found out when the statute deliberately uses the words class or category which are followed by the general words. And if the court will go in contrary to that intention and gives wider meaning to the general words, then the purpose of legislation will be defeated. In the case of Leelavati Bai versus Bombay State, the Supreme Court observed that where the context and the object and mischief of enactment do not require restricted meaning to be attached to words of general import, then the court must give those words their plain and ordinary meaning. So according to this judgment of Supreme Court, if the statute intends to give plain and ordinary meaning to the general words, then restricted meaning should not be attached to the said general words by applying the doctrine of egisdem generis. Now I would like to discuss a judgment of Allahabad High Court in the case of CIT versus Divya Jewellers Private Limited, which was rendered by applying the doctrine of egisdem generis. Facts of the case are that SSC was manufacturer and exporter of gold jewelry and was also manufacturing jewelry for others on job work basis. SSC was claiming deduction in respect of profits earned from the export of jewelry under Section 80 HHC of the Income Tax Act 1961. The formula for computing export profit eligible for deduction was derived in subsection 3 of Section 80 HHC, which is as follows. For the purpose of computation of deduction under Section 80 HHC, the SSC included job work charges in the profits of the business, which is the numerator of the above formula. Now, explanation BAA of Section 80 HHC subsection 3 defines profits of business and emphasizes that certain receipts of income should be excluded from the profits of business. One of such exclusion enshrined in explanation BAA is receipts by way of brokerage, commission, interest, rent, charges, or any other receipt of a similar nature included in such profits. The department, by invoking clause 1 of explanation BAA of section 80 HHC subsection 3, excluded job work charges earned by the SSC from the profits of business on the context that receipts by way of charges are required to be specifically excluded from the profits of business for the purpose of computation of export profit. However, it was found that receipt by way of job work charges were integral part of core business activity, as there was no difference between manufacture and export of jewelry and manufacture of jewelry for others on job work basis. Here, the High Court observed that the word charges used in subclause 1 of clause BAA is found in the company of expressions like brokerage, commission, interest, rent. By applying the rule of egisdem generis, it was concluded that in subclause 1 of clause BAA, the word charges are preceded by the words of specific nature such as brokerage, commission, interest, rent, etc. These specific words formed a distinct genus or category inasmuch as all these items relate to receipts earned by an assessee from non-core business activity. In such circumstances, the meaning of the word charges should be restricted to the distinct category formed by the specific words, that is, brokerage, commission, interest, rent, etc. If so, the words charges should be confined to those charges which do not form integral part of the core business activity of the assessee. And so in the present case, the job work charges included by the assessee in the profits of the business for the purpose of computation of deduction under section 80 HHC were forming an integral part of its principal business. Therefore, it was held that the job work charges received by the assessee company for the job work undertaken as in the nature understood in this case could not be held as similar to the word charges provided in subclause 1 of clause BAA of the explanation given under section 80 HHC. Accordingly, it was held that job work charges would form part of operational income and had to be included in profits of business for computation of deduction under section 80 HHC. So thank you. I hope I'm able to understand, explain this doctrine in a lucid and simplified manner with the aid of the case laws.
For Calcutta High Court decision, this is in context to section 263, wherein the addition in regards to cash credit under section 68, the commissioner had revised the original order. When the matter traveled to the tribunal simply followed certain other decisions in the context of share capital which were in favor of the assessee and said that these are covered by those decisions, and therefore the 263 proceedings invoked by the commissioner had wrongly been done, and it cancelled the allowed the appeal of the assessee. The department had challenged it. The honorable tribunal rejected the appeal of the assessee, and on the ground that this particular issues, what the assessee wanted to argue that it was covered by so and so. Also on the ground that this 263 was barred by limitation. These particular grounds was not dealt by the commissioner. When the matter reached to the High Court by way of a challenge by the assessee before the Calcutta High Court, the Calcutta High Court said that the issue involved in this particular issue was not decided on merits by the ITAT, and the ITAT had not touched upon the merits of the case of the assessee, and therefore it was required that this matter should be set aside remanded back to the honorable tribunal to decide the case on merits, and therefore this whole matter was set aside. While going through this order, it is observed that the tribunal, while deciding this particular issue, had actually decided a bunch of cases wherein more than 500 cases which were on the similar issue had decided at one go without looking into facts of each case, and therefore this was one of the facts which the assessee had raised, that maybe that those cases or that group of cases may involve this share capital issue, but each case was required to be seen by its own facts, and therefore there is a reference made in the order that in the tribunal had made a reference that it had disposed more than 500 cases involving same issue by certain orders, with impugned order has been passed in group cases led by Subha Lakshmi Vanja Private Limited, and therefore these issues were required to be re-looked into it, and therefore the Honorable High Court had set aside the matter back to the CIT appeals with the direction that this issue is open for both the sides and it may be re-argued, and all the questions were open for both the sides. So we have seen that at times when these types of issues are involved, certain benches take a closed view that yes, all these cases have to be dealt, or these cases are of a bogus nature, and therefore it is required to be rejected. Which, but this decision once again reaffirms that each case has to be decided by its own facts, and one has to deal with the merits of the case before coming to any particular conclusion. And therefore, this matter was set aside without, and the court has observed that we have not commented anything on the merits of the case this way or that way, and all the contentions were left open for both the parties. So one can take note of this decision. Second,
similar thing had happened in this penny stock Calcutta High Court. Hundreds of cases have been decided against. I think very huge number was there.
So that's what I'm saying.
Yeah.
Both the ways. Here it was allowed.
Yeah.
Here also it was
reopened. Yeah.
263. 263.
So if there are other contentions other than the factual aspects of that case that had to be looked into, which was not looked into in this case.
So this is basically more
jurisdictional factor.
these are cases according to more factual, unless you belong to a particular same group of cases and one case out of that group has been decided. If that is not the case, then it is not correct to club everything under one basket and thereafter to decide, because each case may have its own facts and nature. So that's what is basically the decision.
No, that's a part of that.
So let's move to the next decision. It is again this is a decision again of Bombay High Court. It is in context to section 179. So this was a case. This was a case where the notice under 179 was issued. One of the requirement of issuance of 179, the court has found that what is required is that the assessing officer should record that the recovery is, they had tried to make the recovery from the company and the recovery could not be made. So the courts have reaffirmed this particular position that the officer before issuance of 179 should record this fact that yes, they have done this attachment or they were not able to recover any amount, and the tax dues cannot be recovered from the particular company, and in that context thereafter they can proceed only after recording the further satisfaction to the assessing officer. If that exercise has not been done, then the provision of section 179 has not been followed, and therefore in this context the court said that 179 order is not valid. Here also one of the issue which was raised by the department is that department had said that it was a public limited company and they had tried to lift the corporate wheel of the company, and they have said no, it is a private limited and it belongs to a particular group and etc., and they have tried to link the directors, the common directors from so and so, and say that this fact also was not put it before the director in the 179 proceeding, that they wanted to lift the corporate wheel and they wanted to treat the particular company as a private limited company. And what was the material on the basis of which they came to this conclusion was also not disclosed to the SSC. So therefore, this was also an additional point what the court looked into it, and they said that the powers to lift the corporate will is within the power of the department. We are not going to comment on it. But when they are doing this particular act, then they should have informed the basis, the material to the SSC, so that the SSC could have dealt with that or made its comment on that. So on both the counts, the court had set aside the matter back to the officer and cancelling the 179 order and saying that you are free to proceed the way you want. But while doing so, you should give a proper opportunity to the SSC to meet its case by issuing necessary notice.
179 never talks of private limited or public limited. It's
Closely held. and therefore they wanted to live the corporate will and come to certain conclusion, which actually was not put forth before the SSC. So one of the grounds which was taken by the SSC was that what was the material, why they have done that. All that has not been shared to them, and it was never put up before the SSC. And obviously, the other point what I explained, that the provision of Section 179 and the requirement of Section 179 was not satisfied. It was not coming out from the orders. What steps has been taken by the department to recover it from the company? How much tax they are able to recover, or what is the shortfall, and why they want to proceed against the director. Coming to the next decision, LKP Securities Limited. This I will just hurriedly put up. This is again a decision in regards to a bad dates where a dispute was there was some disputes which was pending, and the SSC had decided to take a call to write off the particular bad dates in its books. And it was pointed out that in order to safeguard the interest, the SSC has decided to write off this book, and there was some pendency of long disputes which was there, and on that basis it had claimed the bad dates. The department had rejected this particular claim of the SSC. The SSC had approached the Bombay High Court. Though it was in context to 148 proceedings, this particular issue was taken up, and it reached the Bombay High Court, challenging on various issues, technical issues of non-providing opportunity, etc. But when the matter was pointed out on merits before the court that this was the particular issue and this is the purpose for which they want to do, and on the same basis, there were similar orders which were already passed in the favor of the SSC for the other years also. The court went ahead and they said that when this is the claim and the businessman has taken his own decision to write off the dates in his books of account, and that is sufficient to allow the claim of bad dates. And they entertained this particular claim of the SSC, and they allowed the petition of the SSC. And they also referred that similar assessments had been made in the earlier years also, where it has been allowed. So all these facts which was put up before the court, so the court said that we will allow this particular claim here and here itself, and directed the assessing officer to that on that basis you has to complete it, unless there is something else which has come out, then he can decide that matter. Otherwise, this claim has to be allowed. We are coming to the next decision. Sorry. MRF. This is again a Madras High Court decision. This is in the context to Section 144A, the powers of the Joint Commissioner to give a direction to the assessing officer. So, as per Section 144A, the SSC can approach the Joint Commissioner in case of any dispute or any differences is there, and take the view of the Joint Commissioner on a particular issue. As per Section 144, a Joint Commissioner may, on his own motion or on reference being made by the assessing officer or on the application of the SSC, call for and examine the record of any proceeding in which an assessment is pending. And if he considers that, having regards to the nature of the case or the amount involved, or for any other reason it is necessary or expedient to do so, he may issue such directions as he thinks fit, guiding the assessing officer to enable him to complete the assessment, provided that no direction which are prejudicial to the SSC. Now, this provision is very important. Provided that no direction which are prejudicial to the SSC shall be issued before an opportunity is given to the SSC to be heard. Explanation is also there that for the purpose of this section, no direction as to the lines on which the investigation connected with the assessment should be made shall be deemed to be a direction prejudicial to the SSC. So the here was a case where the Joint Commissioner gave certain direction to the assessing officer to complete the assessment in a particular manner, which was challenged by the SSC before the court. The court looked into this particular aspect and said that considering Section 144A, the Joint Commissioner, without giving any opportunity to the SSE, cannot issue any direction which is prejudicial to the interest of the SSE, and ask the assessing officer to complete the assessment in a particular way or the other. And therefore, to that extent, this particular direction was not correct. So here the Joint Commissioner had directed the assessing officer to disallow 2.5% of the transaction amount under section 48(2)(a) and section 37(1) without granting any hearing to the SSE, and there was a violation of section 144(a), and therefore the assessment order was set aside. So this provision, section 144(a), one needs to keep in mind. Many times SSE can also invoke this, as I read, that he can exercise on his own motion or on reference to the assessing officer or on the application of the SSE also.
There are so many in the IPO, what teams are mentioned, how is it possible? Now, assessing officer, additional commissioner, joint commissioner, what is their issue? Who is doing assessment order?
In the faceless assessment, whether 144(a) possibility means up till now this provision has never been withdrawn, or it has never been.
There are two options. One is you write in the submission itself that I request you to
Make,
secondly, you give it to jurisdictional officer physically. If I go, I'm facing this in faceless, please look into the matter.
So that can always
Jurisdictional
joint commission. Jurisdictional joint commission.
So what else you can do?
That would not be available.
Right now, I can go and physically give, please look into the matter. It is up to you to decide.
So maybe what he's saying, after once the show cause notice is issued.
Not possible.
Once the case is transferred to the faceless, then the joint commissioner even visibility goes.
Then who should I go to?
Then you should have to write to the faceless. According to me, then you should write to the faceless assessing officer.
But who?
Who wants to go? The SSE wants to go.
SSE
Yeah.
wants
The SSE wants to go, then he has to write that my case may kindly be referred
But
to the joint
on
commission.
In
on
the
for
submission,
clarification
there are
of
two
so and so
options. One is in
issue.
your own submission you write.
Yes, I think that would be.
And
the
of
only
course
option,
that-
because this second option would not be available. I don't-
Even if you write, the officer here will not be able to do that unless there is a mechanism provided where a joint commissioner can intervene in the matter and give such type of a direction.
Sir, a point for you to represent.
Yeah. Yes.
How? Because this is a
Clarification.
provision where
Because here it's a team now, it's a team, if
We
there's
don't know who
anything,
is now
again,
winning.
if it's anything, it does not, the assessing officer does not decide. It goes to, again, the reference unit or legal unit, technical unit. And thereafter, if there's anything, again, it comes to there, so.
but that is within their mechanism. Here,
I got the point,
144
no, I appreciate.
144 is where I can invoke and I can say that, look,
Yeah.
this is the something very palpable on the face of it, something is wrong. I can always make a reference and say that, look what the assessing officer, and basically the whole purpose in the earlier regime, the whole purpose of this provision, what I can gather from reading is this: the whole purpose was that the joint commissioner, being a senior officer, at times can help or guide the assessing officer. Look, on this point, this is the position, this is the claim, and practically at times when the assessing officer either they don't understand or they are new to the particular issue, they seek guidance from their higher ups. So that was the whole purpose of this provision. Now, how in the new regime it needs to be applied?
Right.
Mahendra, you can take up this.
Yes.
Soon they will abolish this section.
No, they will not abolish, but they will find out a way, or they will.
Button naaki de sir. If you want to.
Oops.
So one more personal here.
So
There
the
is apply, no reply.
next decision is of Calcutta High Court, PCIT versus Burdhaman Development Authority. Basically, this is a short decision in the context of project completion method. Now, this is once again the Calcutta High Court has recognized this principle and said that yes, this is a recognized principle, and it it is a method of accounting which can be accepted. Now, what I can gather from this order is that this was an assessment year which was involving 6-7, very old assessment year which had come up before the High Court, and the issue which was raised before the question which was raised before the court, one of the questions which was there, whether on facts and circumstances of the case the learned income tax appellate tribunal erred in law in agreeing the project completion method followed by the SSC, as the approval of the amount was due to the SSC in the year under consideration and therefore rightly assessed by the assessing officer. So in this context, the Calcutta High Court upheld the order of the ITAT and said that the amount would be taxable in accordance with the project completion method, which was followed by the SSC.
But today also, I think it is possible, na? Though accounting standard says otherwise. Yeah, yeah.
More than 15 or 25%.
Some percentage, and there is some formula.
Yes, that is accounting standard.
And I have
Guidelines, it is not accounting.
Doesn't
Guidelines.
talks of ICDS refers to your service contracts and contractor and contractor, not to the developer.
Not to the, yeah, that standard for developer has not come at
In
all.
fact, it has been clarified.
Still in process.
ICDS is not applicable to the builder.
Yeah, yeah.
It has been clarified.
Clarified, yes.
Clarified by whom?
I think the CBDT.
No.
Correct, my memory.
CBDT, in fact, they want to merge both. They are still in the process of coming, but they have not clarified that this is not applicable to the developer.
But then interpretation is clear. It doesn't apply to builders. Yeah, yeah.
many times I have seen that many of this, they modify the method to some extent as to match between a percentage completion method also and a project completion method. They modify the method and they give necessary accounting that in facts of this case we are doing this. So from some angle we see SSC. They have a modified method of
yeah, because percentage completion have a different way of calculating the percentage. It's percentage of the work complete, your percentage of your sales receipts. So those different combinations are available. And we have decisions wherein different combinations have been accepted.
Because the broad reason is that whether we have to see section 145, whether you have been able to show the true and correct profit. Once you are able to show the true and correct profit on the basis of the method of accounting we have followed and which has been accepted over a period of time, that has to be accepted.
Otherwise, the CBDT has clarified in FAQ issued on 23rd March 2017, White Circular number 10 of 2017 in reply to question number 12, that ICDS 3, the construction contract is not applicable to the real estate developer. Circular number 10 of 2017, in answer to question number 12, dated it, that is 23rd March 2017.
Oh, thank you so much.
Yes. Because why happened? So I correctly remember one of the deputy director search was going on in builder developers cases, and then the lady called me and because I had a so question arises and I that time studied, madam, you cannot do it because they had a following project completion method. So she wanted to apply the ICT 3.
Okay. The next decision again is of a Bombay High Court in the case of Nitin Nagarkar versus ITO. This is in context where a tax recovery officer under section 281 had passed an order treating that the transfer which was made was void, and the department being in the position of a creditor can cancel that particular transfer, and it had treated that transfer as void for the purpose of recovery of tax. So basically there were two contentions which were raised before the court. One was that opportunity of hearing was not given by the tax recovery officer, and the second was that whether under section 281 the assessing officer has the power to treat this transfer as a void. The courts had come down and they have relied on the earlier decision rendered by the Bombay High Court, which was confirmed by the Supreme Court also, which I have given a reference on the extreme right column, where the courts have come to the conclusion if the assessing officer has no power to declare whether a transfer is void or not. In case he wants to and a transfer has already taken place, in that context, then he will have to file a suit before the court and for declaration that the transaction of transfer is void, and he cannot by suo moto sit in that particular position and say that yes, this transfer is void. So what the court, after referring to the Supreme Court decision, has said that that the commissioner, the TRO do not have power to declare a transfer which is void, referring to the decision of the Supreme Court. If at all he wants, he has to file a suit. Secondly, they said that they have to refer to this, they ultimately refer the matter, send the matter back and say that the department will be entitled to proceed the manner in which they want to recover its taxes. But at the same time, they should follow the due process of law, give as SSC and proper opportunity, and thereafter they proceed. So on the extreme reference, right, where I've given a reference, there the courts have referred to all these provisions, the section 222 read with rule 11 and section 281, where they say that where a certificate proceedings which are there under the second schedule of rule 11, the tax recovery officer cannot declare a transfer as void. Further, whether the TRO cannot declare any transfer made by SSC in favor of a third party as void if the department finds that the property of SSC is transferred by him to a third party with the intention to defraud the revenue, it will have to file a suit under Rule 11, sub Rule 9(6) to have transfer to declare that particular transfer as void under Section 281. So these are the recovery proceedings. So once in a case where already this transfer has been taken place and a third party through proper documentation, and in such a case where a recovery or this TRO have some attachments or some so and so, here you can take help of this decision and make proper representation to say that if at all they want to treat this transfer as void, they have to file a suit for that in accordance with this. And this is a decision which is following, the Bombay High Court is following the Supreme Court decision. With the Supreme Court was also earlier a Bombay High Court decision which has been affirmed by Supreme Court. So a good decision as far as recovery proceedings are concerned, wherein genuine buyers are there and they have bought and subsequently they discover that some taxes or etc. which is there, which was not informed, or there was no attachment earlier made, and by due diligence that particular attachment or the recovery was not able, the genuine buyer was not able to find out. So one more offshoot of this, which I can say, that whenever you are buying a property or doing and this type of transaction, it is always better to give a notice in a newspaper. Considering the magnitude of your transaction, you can always consider to give a notice to a member, which will be a notice at large to everyone, including the income tax department. In such a situation, this type of issue you can avoid, because earlier it was possible. Practically, you can also go to the assessing officer and get some certificate to certificate.
There is 281 also. Not mandatory, but you can, if the property is big, you can.
Purchaser, he can.
You have to go and you have to gather these.
Especially if you are buying from some distressed person, it is advised.
There is a form also which has been prescribed.
Yes, there is a form which has been prescribed.
So if you follow that procedure, it is better, considering.
Time limit is there to issue.
Yes.
So
there is a circular which has come for, I don't remember, but it is there.
So if it is advisable that you follow that particular procedure and get this certificate, or in addition thereto, you can always put in the newspaper so that it is a notice to at large to everyone.
In fact, in issuance of debentures and all, usually the debenture trustee will ask for this.
They are often in
One of our practically
Yeah.
one of our cases, when the officer was delaying, he sent a letter that please look into the matter with a CC2 officer. I told him first go to officer. So officer called me up saying, "ये letter सारे मैं ही रखता हूँ, आपको आज शाम तक मिल जाएगा."
No, but I understand this. How?
When he was delaying,
Dealing when there is a time limit, what he explained.
the joint commissioner and
You
CID.
had given a CC2.
So the officer said, नहीं मैं रखता आज शाम तक certificate मिल जाएगा. There is a time.
Sure.
because
So-
transactions get stuck.
So coming to the next decision of Bombay High Court in the case of Dinesh Wazirani, this was referred by Sharma ji to me to deal with this. So this was it was a very peculiar case. I will very briefly go because the facts and the transaction also has been extracted in the order. But without going deep into the transaction, let me explain in a very simple way. This was a case where the matter was challenged, had come up before the court in context to a revision order which was passed by the commissioner under section 264, where the SSC had made an application before the commissioner in regards to certain capital gain which SSC had offered in his return of income. And in view of the subsequent event, now this is very important, I will come later on to this particular aspect, subsequent event, which had turned up, he wanted to take back the capital gain to some extent, because according to him, that was not received or accrued to him during that particular, because of the particular peculiarity of the facts involved in this case. And because of the subsequent event, that particular amount was not liable to be taxed under the head capital gain. Now, the commissioner has denied the relief to the SSC, firstly on the ground that SSC should have filed a revised return. Secondly, he said that I cannot go below the returned income, whatever has been given filed by the SSC. I cannot go below the returned income. And these types of technical issues he had raised, the commissioner, and it refused to exercise his power to give the relief to the SSC. When the matter reached before the court referred to the main transaction. Basically, the main transaction was that the promoters, two individuals and one company, they had come together and they were buying the shares of the other company. And in that view, they were also agreed there was a share purchase agreement whereby certain shares which they were holding, they were supposed to sell those shares at a particular predetermined price. And there were two types of such agreements. Under one agreement, it was decided the rates and what the time limit under which the share were required to be sold off. And the second agreement was regarding certain additional conditions which were added, which the SSC had to perform. Those details are not available in the order, but there was certain statutory liability which were required to be, and certain conditions which the SSC promoters were required to fulfill. And therefore, it was decided that as far as the first tranche of sale consideration is concerned, the SSC will receive, it was around 1 crore 55 lakhs. As far as the second tranche, which was around 3 crores, will be put in an escrow account, and therefore an escrow account agreement, etc., was also entered. And that amount will remain in that particular escrow account, and at a future date, this would have been released. There were the court has also referred to certain clauses in those agreements whereby it was the certain conditions is required to be fulfilled. It was very clearly mentioned. The court referred to all these things, and they said that the subsequent event which has taken place, because of which the amount, the capital gain which he was required to receive, the sale consideration, actually that has not been received by the SSC, because certain portion out of that 3 crores has been used for paying certain statutory liabilities as per the original agreement, and ultimately that amount has never come up. That is not in dispute. The SSC had declared all those factual aspects, and therefore the SSC had not received that amount at all. Once the SSC has not received that amount, how that there can be any tax? On that basis, the court said that the commissioner should have exercised its power. It resend the matter back to the assessing or to the commissioner, directing him to relook into the matter. No, sorry, here the matter was set aside to the assessing officer directly, and directing the assessing officer to relook the matter within a particular time period and to redecide. The court also dealt with the objections raised by the commissioner regarding he cannot go below the returned income. The SSC was required to file a revised return, which he has not done, and said that all that is not a requirement. The power which is given under section 264, the commissioner should have exercised. If the SSC has wrongly offered certain things, he can go back to that, and he can very well file the claim before the commissioner under 264. So they have referred that as regards the stand of the respondent, that is the department, that the income returned by the SSC is sacrosanct and cannot be disturbed. The only thing that is sacrosanct is that SSC can be asked to pay only such amount of tax which is legally due under the Act and nothing more. If the returned income shows a higher tax liability than what is actually chargeable under the Act, then the SSC is entitled to refund of the excess tax paid by it. So the courts have made these observations, and thereafter the last paragraph of the order directs the assessing officer to rework out the capital gain and to compute it after reducing the proportionate amount which was withdrawn for payment of the statutory liabilities, and to look into all those facts and thereafter to compute the capital gain. And if any other claim of the revenue against the petitioner is there, or if the petitioner wants to claim, all that issues were kept open. So basically, there are two aspects in this. One is the 264 aspect, and the second aspect is about the subsequent event which has taken place. Now, if you will see that the concept of subsequent event was, first time I had seen this in one of the decision of 286 ITR Shushila Javeri, where the court had looked into this aspect, that the subsequent event, and they said that the subsequent event is such a nature where the original claim is required to be taken back, or it has never happened. The event is such that it is never shown, that it never accrued to the SSC. That subsequent event is required to be taken into consideration. So this is a very important concept, I will say, which one needs to understand, and can apply in a very facts of peculiar case which is there. Once, just offshoot of this, once I had a query, and I don't recollect, it was very long back, whether an audit report can be changed or modified based on the subsequent event. And at that time, what faintly I recollect, that there is certain standards or the audit guidelines wherein they have expressed the certain criteria, they have given certain points which has been that if this happens, then in that context only you can even revise your audit report in that context. So this is a good decision in both the counts, as regards the computation of your capital gain as well as your revisionary powers of the commissioner to be exercised.
Here, real income theory was applied in capital gain. Yeah.
What you just mentioned, whether the income had really accrued on 31st of March of that paper balance, that becomes a question. On that day, it had accrued as per the law.
As per the law, and the SSC had offered also. The SSC had offered also.
The question comes that this is
subsequent event.
And the subsequent effect says that, okay, as per the agreement also, that the agreement or the conditions were also prevailing when the income had accrued, and then after it was legally, as per law, it was
as per whatever
that it was to be accrued, and it was correctly accrued. And thereafter, if the payment is not realized, the whole question comes: you don't realize the entire amount, which were
the entire amount. In this is the entire amount came in the escrow account. But from the escrow account, there was certain statutory liability as per the understanding.
Yes.
They were required to be made good, and therefore, out of that escrow account, that amount went there.
So it did not come to the
SSC.
So
that was required.
So in a way, it doesn't accrue to the SSC.
The subsequent event, in view of the
the first event, since it is going to go to the escrow account, which I do not have control.
Where did you offer?
So merely because you are offered, there are judgments.
TDS also, no, 1% TDS.
So therefore, this provision of section 264 had come into play, and where they exercise that to explain that the subsequent event is of such a nature that the original income which had accrued to him has actually never realized, and therefore merely because of the accounting.
And something which was had accrued at that time, you can say now it is not.
So therefore, the court has gone on the real income.
And if you go on the real income, it is not accrued on that day itself, the first day itself.
Because of the subsequent event.
No, not because of the subsequent. Because it was supposed to go to the escrow account.
No. Going to the escrow account is
capital gain full scheme. If you say on transfer, it accrues.
It accrues.
So right, year one, the transfer has taken place.
Correct.
Assuming you have received only 10%, but if the transfer has taken place, then it accrues in year 1. You receive the payment in year 3. All right. As per that agreement, you receive the payment in year 3, part payment, another balance 50%. The balance 40% you don't receive at all.
Still it
Can
is
you
taxable,
still
yeah.
say that 4% in the year 4? I
No,
can
but
say
what is
Whether it is subject to some condition that I will receive, that is the question.
Yeah.
If it is
Yes, it is subject to
unconditional, after 3 years I am supposed to receive, after
So
5 years
it
I am
is so
then
it is subject to condition that
subject to some conditions which I am supposed to fulfill, then my
May not have got right to receive.
Yeah,
then I will get right to receive at
so
that
then
particular
it
time.
does not
It is like
accrue
this.
only, or it
Yeah,
is not
correct.
transfer. Can I say that?
no, it doesn't
there is
accrue.
no transfer
It does not
only
accrue.
by-
It doesn't
Completion of
Transfer
sales
is not approved.
consideration is not.
It is like this, Master Bhai.
No, capital
Like
gain
government,
transfer is
like when government takes it forcefully from you, it gives you
there is
some.
a provision. Government takes it forcefully. There is a provision as and when they give you money.
It is something like that in
Compulsory
the simple words that as on 31st March when the transaction took place, at that time on the face of it, it has accrued. But there are certain things and certain condition which is subject to that accrual will always be subject. But that event, that subject or that condition has happened after 31st March. And because of that, the accrual which we had seen originally as on 31st March has changed its colors when the event actually has taken place. But when this event has taken place, the return has already gone. The SSC has already complied with it on the basis of what has happened on 31st March. Now the question arises, as per the real income theory, as per this thing, whether the SSC is required to pay the taxes or the SSC can have some remedy to take back. We have seen many other cases in context to 264 where the SSC have gone and they have claimed that in different contexts, not only in context of this, and they have got the relief from the.
I know even in Bombay High Court itself.
Yeah.
So can we stretch this to 154 also?
He will not take this
No.
year, only we have to go by it, then only. See, this is
So
our.
That is.
I think,
We have to go to that.
yeah,
Sir, can this logic be stretched to 154 also?
No.
yeah, it's not.
Mistake ever is different. So coming to the next decision, Ajay Bhandari. So this was Ajay Bhandari. This was in context to 148, read with section 149. So this is a important decision which had for assessment year 14-15, where this matter when came up before the Allahabad High Court. Important observation in this order is that the additional Solicitor General who appeared in the matter had made a statement that in context to the board circular that the notice under 148 relating to assessment year 13, 14, 14, 15 and 15, 16 shall not attract the judgment of Honorable Supreme Court of so and so. To some extent, I think that that judgment is correct in the observation or the statement made by is correct because the Supreme Court in that relevant paragraph where the ending is a sub clause 4 has very categorically kept the issue open, and they said that the 149 issue will be kept open and all the contention from both the sides will be kept open, and therefore strictly to that extent this yours will not be touched or it will not be affected. The only thing is that after this there was a circular which was issued by the department which said taken a very different stand. Considering all these things, in facts of this case, because the tax effect was less than 50 lakhs, so if you will read the order is little bit cryptic. At one point, they make this observation about the statement being made by the ASG. However, the very next paragraph, they make this observation that because the tax effect involved is less than 50 lakhs, and this is beyond the period of 3 years, and therefore the proceedings are to be quashed. So there are both the observation, but the first observation will help you at least to clearly very point out that in one of the matter in before the court, the union has taken a peculiar stand. So at least that dispute they have stayed means they have not decided. So this is a good decision which can be used for that purpose.
Can it be used in that sense that 13, 14, 14, 14, 15, not?
They have stayed only.
They stayed. Like right now to stay here. So the only
Final order
option is we can just raise an objection.
So this order is a final order. This Allahabad High Court order is a final order.
Then he does not give the verdict on this part. It only gives on that 50 lakhs.
50 lakhs.
But the observation of additional Solicitor General what has been given is extracted in the order. So that observation is there. So to that extent, at least that dispute about the circular, you can meet that particular point and say that the circular now cannot override the act, what we would have argued here because of the statement of a Solicitor General before the court itself, though it is made before Allahabad High Court, but being a central act and he was representing the union. So one has to understand that he would have made the statement only on instructions. And therefore, to great extent, you can rely on that. Coming to the next decision, Best Built Well Private Limited. Again, this is in the context to the new provision 148D. Here, basically, the point, the observation, one of the paragraph where the courts have, after referring to the rejoinder of the department and after looking into the reasons, they came to a conclusion that look, the impugned order and the show cause notice which was issued to the SSC earlier are based on distinct and a separate ground, and therefore this order passed under 148A subclause D is not correct. So when we say that this observation, we have to read this order in complete. The original issue which was raised by the department was in regards to certain entities which they had claimed to be non-filers, hawala, etc. But when the rejoinder was, the reply of the department was filed, and the SSC filed a rejoinder subsequently. In the reply, what they had put up the case that the ITR and the GST data was not reconciled. Though it was in context, it is not very clear that in what context, whether it was in context to those non-filer purchases from non-filer, because the show cause primarily, the wording used that the show cause notice primarily states that it is seen that petitioner has made purchases from certain non-filers. So this was the wording. Whereas subsequently, when this 148D order was passed, where they had come out with this that the petitioner ITR and GST data did not reconcile, and in the reply also they had come out with this. The SSC had filed a rejoinder stating that what is the reconciliation and what is the GST data which is not reconciling. All this information was never given to me and never furnished to the bank. He also states that no GST information showing substantial routing of funds was never furnished to the petitioner. In this context, the court observed that having heard the parties, this court is of the view that the impugned show cause notice as well as impugned order under section 148B of the Act are based on distinct and separate ground. So in that context, this is given. I was referred this particular decision by so and so, and it was just referred that in context to the earlier regime, which was that can you raise a distinct can you raise
Improve upon your ground or a separate?
No.
So what is what you have
Improve upon the
given, then you cannot improve.
Thank you, Mahendra bhai. The point which was there earlier, which was that if you issue a notice on one particular issue, can you issue a thereafter on some other issue also without giving
Whether
a
you can improve the reasons.
no.
Acha.
Show cause notice. This can you issue a notice say for A,
Okay.
and can you subsequently while passing the order under D, you say that D is also there, something like that. I think so. That is not from reading of this judgment. Actually, is what I can gather from the fact that is not the case here. There is interlinked between the ITR reconciliation and GST, and petitioner has made purchases from certain non-filers. So I'm trying to connect both the things and saying that it is more a case of improvement rather than taking a two distinct ground, because the wordings what I read and I have extracted in the note also, the order, the based on distinct and separate ground. So really one reads that can an SSC raise another ground that which was in the earlier regime, but in this case also, in new regime also, it is very clearly clarified that the same condition has been put that in the course of the assessment, if the assessing officer is able to find out some another income which is escaped assessment, he can very well take that, which was there in the earlier regime. In the earlier regime, the judgment of JET and other decisions which were there, which basically said that boss, you reopen the case on A, you make the addition on A. You can jump to B also, C also, D also. But in case if you don't make an addition on A, you cannot jump to B and C.
The reason was simple, that they don't have a jurisdiction. You have reopened for A. When A does not exist, the jurisdiction falls.
Yes.
Since there is no jurisdiction, you cannot go to B.
So prima facie, when you read this judgment on the first blush, by reading this sentence, paragraph 7, are based on distinct and separate ground, one try to say that is that issue relating to what is that it is a two separate ground. But if you read the whole order, then paragraph 6, 7, and 8, you will understand that maybe it is a case of improvement of the reason rather than taking two separate distinct ground. But from whatever we can gather from this order, to that extent, because the whole case also is that analysis of whatever they are arguing is about the GST information about third party revealing about bogus purchases and etc. So I understand that it is more a case of an improvement or taking some additional ground on the basis of which the originally which was not there in the reason. So to that extent, this decision, the courts have said that no, once you have taken some new point which was not put forth before the SSC, then you cannot do that, and they caused that order under 148D and send it matter back to the assessing officer to redecide afresh. Okay, the next decision is of Tribunal Babanji Kumarkar. Very short, this is a Pune tribunal decision. This is a case of a decision where no cost of acquisition and therefore no capital gain. Here was a case where the SSC's forefather had received certain land from actually the forefather was cultivating the land which was belonging to certain jagirdars and so and so. And somewhere in 1970, the SSC father who was there, because what I understand gathering from the facts and from this case is that the in the records, in the revenue records, the only thing which had come is that the owner of that land had filed an application before the revenue authorities requesting them to delete their name, the owner's name, and put the name of the cultivator straight away. So this was the observation in the revenue records. The revenue records never spelled that this was a case of a sale purchase. The revenue records never mentioned that it was a case of a gift. The revenue record never mentioned that it was a case of a succession or it was a case where under the protected tenancy, there is an act under Maharashtra Tenancy Protection Act under which this land was transferred. And to say that the SSC had produced certain other records where it showed that whenever such type of transaction takes place, the revenue records record this fact. If it is a gift, it will record that there is a gift. If it is transferred by way of a success, reasons are recorded. Here, that is not the reasons recorded. It is simply that particular say that I am cultivating and he says goodbye, I don't want my name, remove my name. So there is no consideration which is there. It is not a case of a gift. It is not a case of a sale. It is not a case of a succession. It has just been received. And therefore, there is no cost of acquisition involved. And relied on Sambhaji Nagar Cooperative Society as well as decision. The other decision is also very important of Andhra Pradesh High Court, where it was also a case of a protected tenant in respect of certain lands. So in that context, this was relied, and the tribunal, all this was argued. The CIT appeals in this case had actually rejected the claim of the SSC on the ground that they came to the conclusion by reading all the documents. They came to the conclusion it is a case of a gift. Straight away, it is a case. It was a gratuitous act, and therefore it is to be treated as a gift. Before the tribunal, we argued that look, if it is a gift, even that time gift is required to be registered because it is an immovable property. In the case of an immovable property, without a registration, a gift is void. The revenue record doesn't mention that it is a gift. You are saying it is a gift. If accepting your statement, then as per the Registration Act, a gift is required to be registered. How that revenue authorities got their name registered without a registered document? So is the assessing officer correct or the revenue authorities are correct? For that proposition also we put up certain decision to say that the revenue authorities cannot sit on the chair of the the assessing officer cannot sit on the chair of the revenue officer and decide what is the document. You have to read what is the document and not draw inferences out of it unless there is something else to be done. Certainly the gift theory had failed because the Registration Act is very clear as regards immovable property is concerned. So when all these things were cornered, the department representative had nothing further to say, and just to draw the inference that there is not an inference, but this is a fact. In the region of Pune, these are fact that there earlier time there were Jagirdars and these people who had received lands from those Britishers as an inam or through the Peshwas. They had received certain lands and they were occupying, cultivating, using that for years together. And after the various acts which came in force, whereby they Consolidation Act and whereby a person cannot hold a particular piece of exceeding that land sealing act, etc. So because of that, they started releasing this. Because if they don't release, land is not being used; it is being cultivated by somebody else. So already that land is in not a possession, and because of that land, the name is that the other land which is actually in their possession and they require that will go away, and various other reasons which we are not concerned, but we are just saying that. So for whatever reason, he asked to delete the name. He never paid, he never informed that there is a consideration, he never said it is a gift. And on that basis, the tribunal came to the conclusion. But when you will read this order, there are a lot of facts which are there, which I just discussed, is not coming out in the order. But that was.
There is a law. If you are tilling the land, then you become.
This is the no. This is
that was between a period at come.
That was a period when that it was not only in Gujarat, it was in many other states, including so therefore that protected tenancy act and
in fact, this also must have happened through that.
The point is that in this case, we had gone to a long extent to prove from different other cases that look in the other cases where it is will, it is mentioned, where there is a sale, it is mentioned, where there is a gift, it is mentioned. Here it is not. It is mentioned, but unfortunately, if you will,
when he's telling just delete my name, probably if it is because of that particular law, then what would have been the situation?
It would have been same. See, it will not. He will not record because of this law. I am releasing this.
So
it will never. So therefore, no cap. And this was a claim where the SSC has raised this claim first time before the CIT appeals. It was not that originally he had raised the claim.
What happens is that if you consider that it is under law, the operation of law, that this had to be compulsorily transferred, then that law particularly says that since you are stealing since so many years, still so there is a inbuilt consideration. So you're not quantified.
So Andhra Pradesh High Court helps on that point. So going hurriedly, we are already 8. Just Parasmal next decision. Parasmal Champalal Bomboli is a decision of Mumbai Tribunal in the context of 263. Basically, the assessing officer had said that there is a sale which has taken, and therefore 5627 Roman B should have been applied. In the original assessment, assessing officer had applied all these things. When originally the land was sale, at that time there was a capital gain, and that capital gain was invested. And during that time, this particular issue about the 54 was taken up in that particular year. And thereafter there was another sale which had happened in this particular The assessing officer had invoked that. The assessing officer has the commissioner invoked 263 on the ground that 56(2) Roman 7b has not been invoked by the assessing officer. We were able to satisfy the tribunal that though this section is not referred, But all that inquiry which is required for the difference between the stamp duty value has already been looked into. The source of fund has been questioned, that has been explained. All these aspects everything has been disclosed and looked into by the assessing officer. On merits, we said that there are decisions which are in SSC's favor as well as there might be a contrary decision also. But this is a debatable issue. And once debatable issue and facts were already on the record, what inference assessing officer had to draw, he has done. There is an application of a mine and thereafter he has allowed. And therefore 263 was cancelled in this case. Serial number 21 is a case in way of software. SAP. Now SAP is it is a very costly software, and the case was here that because of the implementation, a big amount was invested by the SSC to acquire this software and program SAP. The assessing officer and the commissioner rejected the claim, and on the ground that they tried to mention there is an application software and there is a system software. Application software are different, system software are different, and this they passed the commissioner the commissioner appeals had passed a very detailed order explaining this, what is the programming, what is application software, what is system software, etc. And he said that no, this 60% will not be applicable, it should be 25% because it falls in the category of intangible this and not under the software. And that is how. So matter, when it came before the tribunal, we argued this matter, explaining that what was the intention when the note, one of the note in the depreciation schedule, it is a note is given, there is specifically provided software, and it includes all sort of software. It has not distinguished between an application software and a system software. And we were also able to point out certain decisions of our own High Court and Madras High Court, wherein on these types of software, the courts have allowed the claim at the rate of 60%. And really one doesn't have to see the quantum which is involved, but really what has to see when it is a software, the rules, the schedule has never made any distinction between a system software and application software. So the commissioner or the assessing officer cannot make this type of distinction and disallow. So we are at serial number 21. Yeah. The other decisions are also there. I think so. You can go through it. The serial number 23 is a decision. Just I will touch upon that. Again, it is in the context of 263. Anand Vittal. Anand Vittal is again a 263 where the EO has exercised the quasi-judicial power vested in accordance with law. So basically, Anand Vittal was a case where there was an ex-parte order passed by the assessing officer. The reason being that SSC was an NRI and his father, who was a senior citizen, and due to this new faceless e-assessment proceeding, he was not able to represent the matter before the assessing officer. However, the assessing officer had the basic detail of the agreement, which agreement basically provided that the purchase document which was there, which provided that there were 3 SSCs, SSC, his father and his mother. So is that the assessing officer looked into that document and he said that because 3 people are involved, the source has not been explained, nobody is there. So I will take 33% and in the case of the SSC, he made that addition. That particular order was subject matter of an appeal before the commissioner appeal, which was pending at that particular time. The commissioner invoked section 263 and he said that why you have made only 30, you should have made full amount and the total amount should have been added. Why you have added only this amount? The other 2, the father and mother, out of which one of the SSC was filing the return and other was below the taxable limit and therefore there was not filing. The real fact was that there were certain amounts which had flown from mother and father, and there were certain amounts which had flown from the son, and there was certain amount which has come from the bank. So all these facts were put before the tribunal. We explained that though it was an ex-parte order, though it is what is wrong, what is required the assessing officer, the commissioner to say that the order is erroneous, one, and that it is prejudicial to the interest of the reviewer. How the order is said to be erroneous? He looked into the record and he decided. When the matter came before the commissioner, he issued 263. We provided him all the information. If the commissioner wanted to come to a certain conclusion, he should have decided on merit and say how it is erroneous and how it is prejudicial to the interest of the revenue. Yes, assessing officer rightly made the addition to the extent of 1/3 the share as per the agreement. What is wrong? Without any basis, in fact, asking to make the total addition would in fact cause prejudice to the other two parties. There you are making your addition, the consideration is there. Tomorrow intersect, something is there. You are treating everything that he is the owner without even issuing the notice to the other two parties, though they are a family member. And we have put up that why they had ex parte order is not there. We put up the case that the matter is pending before the CIT appeal. We put up the case explaining the source of fund. He is an NRI from so and so period. What is his source of income? His bank account details, the flow of money from him to his father, the power of attorney given to his father for signing those documents, etc. Everything. And we also gave him the bank loan details, which very clearly specified that how this loan was taken and the balance consideration. It is very obvious. The bench was of Pramod Kumar, and very rightly he looked into everything and said that where is the case you are doing it, everything so is crystal clear, and all these records were given to you in the 263, though not in the assessment, but in the 263 proceeding. The commissioner ought to have recorded what wrong has been done and what the assessing officer has failed to do it. Once all these details were there, he should have looked into and thereafter decided the 263. The other decisions, you can just go through it. I have listed down the citations as well as the brief notes on that. One of the decision at serial number 27, I think so in the context of 14A, it is a Mumbai tribunal decision, very important that whether it is retrospective explanation which is added, whether it is inserted by Finance Act 2022, whether it is retrospective or not, can be great useful in the course of the assessment, because this is always a live issue. You can look into that and use that decision. Thank you. The rest of the decision you can treat it. Some important decision are there in the context, and different issues are there which you can look into at your leisure. I had already, when I sent this list, Sharma ji had said that you have taken too many decisions. Then I explained that I have already listed. So let me take it. Whatever I will be able to touch upon, I will try to complete it. Friends, thank you very much.